I pulled up one of the asset classes that, of course, is going to be very much in the eye of the storm as we go through the next 24 hours, 48 hours, and that is going to be the dollar. This is how the dollar has been moving, and we've done some research asking investors what they expect to see from the dollar, and this seems to be the conclusion. The greenback's direction against the yen, this is specifically, will be determined by the election. We see a stronger dollar if Clinton wins and a weaker dollar if Trump wins. Would that be your expectation?
Well, it is a little bit more challenging to have a view specifically on the dollar. Certainly, the yen should benefit if we are in a risk-off mode in the event of a Trump victory. The question is, what do you think is happening from a foreign investor point of view vis-a-vis U.S. equities and U.S. treasuries? Are they buying? Are they selling? And then how does that translate into the dollar? So I think there probably it's a little bit more equivocal than what you might see necessarily in treasuries or in equities.
What kind of policies is Hillary Clinton going to bring to the table that's really going to prove bullish for markets? I mean, ultimately, a lot of it is priced in to equities and bonds and across asset classes, right?
That's exactly, I think, the key question. How much is she really going to be able to do? Expectations now that the Republicans may actually still keep control of the Senate. Then again, even if they lose control, it's going to be by a small amount and not have a big impact on kind of their ability to obstruct or to pass legislation. So I think expectations are quite low. So that might be the potential upside if there is more compromise than we've seen up to now. There could be something that happens, but really people aren't anticipating too much.
Which kind of playbook are you looking to then, Daniel, to help you navigate the rest of this week then? Are you looking at the Brexit playbook, or are you very aware of the limitations of drawing parallels between the two? What are you reaching for?
Well, you've got probably a couple that you want to think about. Certainly Brexit is one, and that would be comforting insofar as the turnaround was pretty quick. The other one you would certainly want to have in mind is what happened in 2000 when you had the disputed election in Florida. That downturn was much more severe, around 11%, and lasted for quite a while. Then you also have just what happened in the first quarter of this year when we had China was at the Fed. That was a good 6 weeks. So we're going to be somewhere probably between those two extremes, but I think there is a potential that it could be drag out for a while, particularly because you have to wait now till the Fed in mid-December.
Let's talk 10-year U.S. Treasuries in context of the U.S. elections. We've pulled up this great chart just so that you can get a better perspective. We put in there Brexit impact, Brexit Day 1, Brexit Day 2. You can see the yields falling there. Clinton's lead starts widening. We've also highlighted as the Trump comeback falters. And then finally, in the latest episode, the FBI reignites the Clinton email controversy.
And then doesn't.
And then again rolls back on that. How much of this is Fed-driven? How much of this is election-driven? And where does it go from here?
Yeah, exactly. I think you have to keep in mind that, of course, it's not just the election. There is the Fed, there is China, there's Italy, there's many other things that we can worry about. And I think the fact that even with the announcement of the initial Fed investigation a week or so ago, you really didn't see treasuries fall that much. So it didn't seem so much of a risk-off move from a treasury point of view, more on the equity side, which makes you think it's really probably at least as much about the Fed, and the Fed's still going to be there after election.
What do you do with the euro in this context? I've got here a chart which shows how much the euro is in vogue. Sentiment, the most bullish on record before the US vote. This in favour of the euro. But of course, bear in mind, this is weekly data. This comes from Friday, so before the latest, very latest twists and turns. Is that something you'd get excited about, euro bullishness running into this?
Probably a little bit more cautious there, because if we assume that it's going to come through that Clinton does win the election, and then we focus back on the Fed, I think a lot of it is going to depend on the tone that we get from the Fed in December. We're all expecting the hike, but it's really what they signal for next year. But for the most part, more interest rate hikes in the U.S., stronger dollar, vis-a-vis what the ECB is likely to do, of course, is continue to print euro and buy bonds. So I think to really see a significant rally in the euro, we're not quite there in terms of the layup.
In a scenario of a Donald Trump victory, what happens to assets? What kind of sell-off might we see?
I think if we look at what happened, say, post-Brexit, we're already down perhaps 5% from the highs of a month or so ago. So could you see another 5 or plus percent? Potentially, but again, to the degree that the sell-off we've seen so far is more about the Fed than necessarily about Trump, I think the potential downside perhaps a bit limited. What's really going to make the difference about how far it can go and how long it goes on is the rhetoric from Trump post-election. If he talks a lot about trade in particular, I think that's going to frighten investors, and I think that's what could potentially weigh on the market.